Imagine if there was a way to go back in time and to be able to buy just before the market absolutely took off. You could buy houses in Australia in most regional centres for about $200,000 to $250,000. 3-bedroom, 4-bedroom brick homes. Now, I've been on YouTube for a little over 5 years. Now, something I want to share with you is very, very important because it gives context as to what's about to play out now. If you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, for the lucky few that have been following me for over 5 years, thank you. Thank you for the support. But I hope you made a move when you watched this. So we're gonna see this period, and I expect that it's gonna be about 2 or 3 months of this uncertainty. We're already seeing positive news with the coronavirus in terms of how we're dealing with it as a country. And then you're gonna see an absolute growth period that we've never seen before. Now, I say this not because I'm in the property market, but because I understand how it works. Now, everything will rise in price. So wages increased, rent increased, house prices increase. Debt will not increase. So, I don't even know why I'm drawing a graph. No time for graphs, my friend. If you buy a property today for $250,000, we know, because of the example I've just shown you, that the money value drops. So if everything drops and now you're making $250,000 a year, you could effectively just buy one of these every year. So that causes this to go up. So now the 250 has gone up and now it's worth 450. This then causes what we call the wealth effect. And the reason it's called the wealth effect is because now you think you're wealthy. You go, hey, wait, my property is now worth $450,000. My debt here was, let's say for argument's sake, was a 200K loan. Okay, so does my loan go up? No, it doesn't. Your interest rates might go up. You purchase in today's value and the debt is in today's value. Tomorrow's value, your price has gone up. It's now $450,000, but your debt stayed the same. So what you could do is imagine if you had 5 properties, right? You had 5 properties, you purchased them all at 250, and so that's equals to 1.25 million asset value, and the loan was 1 million. Now, if the value goes up, which it will, because we've understood how it works, and this is why I said context is key here. You understand why I'm saying the property prices will go up. So then you've got this valued at 450. So now you've made a profit of 200 on each property. So that's $1 million, right? All you'd have to do is literally get 2 of the properties or 3 of the properties and pay down that, and you'd have 2 or 3 properties for free. And that is essentially why we are in the greatest time to be purchasing property. It's better than anything I've experienced. It's pretty much gonna be better than anyone experienced over the last 10, 15, 20 years. And why I'm saying you need to align yourself with a professional that knows where to be purchasing these. Not everything is gonna go through this growth. Not everything will, right? We've secured our real estate for the growth that we're gonna see of whoever knows. I predict we could see numbers anywhere from 15 to 25% of growth. And I know some of you guys are sitting there and going, this guy's a load of shit. I don't understand how he's getting these numbers. If I told you 2 months ago that we would all not be allowed to leave our houses, we're not allowed to leave home, we can't meet other people, we can't meet friends, and there's social distancing is a thing, you would have thought I was an idiot as well. I am saying today that we are going to see the greatest property increase in price action in our lifetimes. This is a black swan event, guys, okay? Get educated as quick as you can. If you need the help, contact me. But if you can secure something now, you've got to ask the question, if you purchase here, maybe they're available. You purchase here, maybe there's a few less available, but now the buyers are coming in, they're getting a bit more confident. But what most people will do, and you're not those people, the 99% are gonna buy here or want to buy here. And FOMO is gonna kick in, and that's just gonna fuel this. And most people will end up buying about here, and that's when they're gonna get screwed over. It literally gives me goosebumps to look back at that video, how things had played out, and how crazy it was at that time. Being stuck at home, not having any certainty around what was gonna happen, and it really took a lot of courage to be able to, one, publicly say those things, but also act on those things. I bought a lot of real estate in 2020. I went on to buy a lot more in 2022 and 2023, and every year since then, I've been buying real estate. And the reason I have is because I've been in the market for 12 years. I've realized one thing is certain. You're definitely gonna get a lot of articles that come out that year, a lot of media headlines that come out, and a lot of people suggesting that the market's gonna crash now. And what we realize historically is being in the market makes a lot more sense and you make a lot more money over the long term. Because 9 out of the 10 years, prices go up, 1 year out of the 10, prices go down. So to be wrong 10% of the time, but right 90% of the time, you'd rather be in the market because what's happening right now is bigger than you and I. It's the debasement of currency. And what this means is that there's so much money in the system which inevitably causes inflation. So one thing that you need to really look up after this is the M2 money supply. And what you will find is there's so much money being accumulated out of the governments and the central banks, we are now in a position where we have something called inflation. And for the better part of the last few years, inflation's been a real concern. Everyone's been talking about it. Now what we're seeing, especially with the latest inflation data here in Australia, is that we've just fallen into the range that the RBA actually wants, which is why we've seen 50 basis point cuts already and probably looking at another 80 to 100 basis points in the next 6 to 12 months. This will put massive fuel into the property market that's already starting to flourish. I covered this off in my last video. Definitely bookmark it because it is so important to know how the next couple of months play out. Now, on average, if I look at the last 12 years, there's been a couple of years where the markets have actually gone down. My portfolio as well, in 2017, 2018, actually went backwards in terms of price, and that's a pretty scary thought, especially when you have leverage and you've got debt that's taken out. But one thing is for certain, and this is when you zoom out and look at the macro, you'll realize that prices will always go up. And the reason they will always go up is because it's denominated in currency, which is fiat currency. The Australian dollar, which continues to get debased, which means the dollar that you're using to buy goods and snacks, as well as saving, is not worth the dollar that it was 5 years ago. And if you think about how much the dollar has lost its value, well, the US dollar, which is supposed to be the reserve currency of the world, has gone down by about 99%. And now Australia has gone down even further than that against the US dollar. This is why everything seems so much more expensive. It's why you could buy houses in Sydney for less than $10,000, and now the median is sitting closer to 1.6 million. This is playing out right in front of us, but unfortunately, emotions get the best of us and we sit in the micro. It's like driving a car and just saying, I'm gonna look just ahead of my car as I'm driving, just the 1 meter ahead, and I don't care what the traffic is above. What you need to do is start moving the vision up and start looking at what's coming. Because this is the second time I'm coming out on the channel and saying, please listen to me. Back then, I had less than 100 subscribers listening to me on the channel, and I don't know how many people actually made a move. Now we're almost at 100,000, which is absolutely wild, but a lot more people might listen, but I hope a lot more people execute this time. I'm sure I'm gonna get roasted in the comments saying, of course, it's a buyer's agent giving FOMO to the market, but prices will go up. I'm gonna buy it irrespective if you buy or not. And if the market does come down in the next 3 to 5 years, it's only gonna be a small blip in the bigger picture. Why? Because we know that it's denominated in a currency that will always go down. And that is a guaranteed fact, which is why we often say that savers are losers, because over the long term, you're saving a currency that's gonna lose its value anyway. In fact, the government is so open about this. The central bank aims for 3% inflation, which means over time, that 3% compounds year on year on year, which means if you save that dollar that you worked so hard for 10 years ago, it would be less than 50% by the time you actually retire. Now, are we gonna see prices increase to the levels that we did during the pandemic? Probably not. The only time I could go and say we might see prices absolutely crank is if we see a full-on black swan event. In the short term, that might be really scary. It might actually put prices down because people will be scared
weak hands will sell, and that may cause a trickle-down effect into prices going down by maybe 10%. If that plays out, that might be your best case scenario. Even just the thought of going, hey, you know what, 10% in the market? Oh yes, please, I'm lining up with my cash. Guess what? There's a bunch of others that just heard that line and got really excited as well. And that's the problem here, is that there is so much pent-up demand, not enough supply, so that even if prices were to fall, if the market even allowed for that, you would have so many buyers come in, flood into the market and buy up everything they could. Now, I'm not oblivious to the fact that we're going to get corrections, and we should get corrections, but if you look at the entire macro landscape, we've got M2 money supply increasing again for the first time after a few years. We've got rate cuts coming in, and we've seen that after a few years. And we know for sure that we've got a chronic undersupply of property, and there's no incoming supply that's going to match the demand. That's also a certainty as well. And we now have consumer confidence increasing as well. Let me show you exactly what this looks like. Back then I used a whiteboard. That was about $15 from Kmart. Today we've got a bit more tech, so I'm going to show you now. So here's my graph, which is property prices. And on the left here, we've got the performance. So at 0, it means the market is flat. Obviously minus 10%, market's going down. And then up here, we've got 80%. Now at the bottom here, we've got April 2020, which is when I released that video on YouTube. Currently, we're in June 2025, so just a little over 5 years. And most people are concerned by what happens in the next couple of years. Should I just wait and buy later? Should the 18.6 year cycle play out? Am I going to get screwed because it's the winner's curse? Or am I looking at this completely wrong? If I'm going to be sidelined, and you really need to test your theory, because if you are sidelined and this scenario plays out, you may never get into property again. But if you get into property and you have an emergency fund as well as a good strategy that counters any moves on the downside, which historically in Australia, we've seen the max drop of about 10 to 12%. If you can weather that storm, knowing you've picked up that real estate, just like I explained in that video, in April 2020, you'd rather be in the market than not. And what I see playing out, based on everything that I'm seeing, all the data points, as well as buying over 1,000 properties over the last 18 months, I have a lot of confidence in what's about to play out. And what I believe is going to play out is prices going much, much higher. And why I believe this to be true is my next graph, which is consumer confidence. What you can see is 100 being a balanced market. Anything above 100 means that we're in a greedy state. Everyone wants to make money. Less than 100 means, look, I'm unsure. I don't know what's going to happen in the market. What we've seen, and this is straight from the ABS, I've just drawn it myself. And what you see is in 2016, we're just at about 100. At that point, we see the decline. And we saw that because we had APRA come out, we had banking lending restrictions come in, we had a lot of change at that point. And this is what I was explaining. My property portfolio did slow down during this period. Some properties actually came back as well. Then what we see is a real low here when it came to the lockdowns. And this is about where I made the video around what's going to play out. And then of course, we saw so much demand come into the market. Since then, we've seen the drop off in terms of consumer confidence. And that was largely brought about because we had all of this news around interest rates won't go up, and suddenly we had rate increase after rate increase about 13 times. Never before have we seen that in history. And what we did see is a bottoming out here in terms of consumer confidence, and we're starting to see this rise. Currently, we're in the 90s, so about 92 to 93 currently. Where are we going to end up in 2028? Well, I think we're going to end up closer to about here. We're going to see the confidence come back into the market. We'll think that we've gone over this inflation hurdle. We're going to see a lot more money come into the system, and that's just going to boost asset prices again. What we will see is probably a correction at that point, but I don't think it's going to be at the levels that we think. The prices can stay more rational than you and I can stay rational. So what we might see is in 2028, 2029, we see this completely drop off, but in terms of price, it may not actually shift all that much. We might see a slowdown and maybe that growth isn't there anymore. Interest rates potentially start rising again. We'll go from greedy to fearful, fearful to greedy. And that's just normal market psychology. So what am I predicting in terms of prices and rates? Well, at this point, if you've watched all the way through, you probably enjoy what I talk about and my analysis. Definitely smash that subscribe button because you don't want to miss the next couple of years. What I think is going to happen is prices will most likely go like that and probably have some sort of slowdown in this period. Again, it's not drawn to scale. It's just there to give you an idea. And I think what's going to happen is we're going to see interest rates drop off and then probably rise again. So right now, if you're thinking about when is the right time to get into the market, well, a lot of people are going to end up purchasing at the wrong time. What they will do is they will pick up property closer to about here because all the conversation around interest rates are so low, we're gonna have all these prices continue to go higher. Everyone thought the market was gonna crash from here to here. It did not crash, so we should continue buying. And you're probably gonna get caught offside buying at the top. Interest rates will start going back up to a normal level, and we're gonna see the whole cycle play out again. This is why it's so important that you have strategists on your side around how to navigate this market. This is the short term. If you just want to go, you know what, I don't really care. I will buy now, I will buy next year, and I'll continue buying. It's probably the best way to do it, to be honest. You can hold on to your assets for the next 30 to 40 years and just play out the market because you will make more money in the market than you will out. If you want to keep it simple, be in the market, DCA into property if you can, use the equity from properties, always have strategies and always have an emergency fund so you can stay in the market for as long as humanly possible. I've been in for 12 years. I'm probably going to be in for another 12 years at least. And I'm so excited to share that journey with you guys on here on the channel. It's wild to think how things have played out over the last 5 years. I'm more confident now than I was back then, purely because I buy so much real estate now. I'm in the right circles. We've got a full strategy team looking at data every single day. And I'm so excited about what's coming next, especially for you and I. So if you're interested in getting started, executing with speed, definitely contact us. If you enjoy content like this, subscribe and watch a bunch of other videos because I've got 1,000 videos on this channel. And some of the real fun ones are to look back over the last couple of years and see how things have played out. I hope you guys have enjoyed this one. If you have, I'll catch you guys on the next one. Thanks, guys.